Hello and welcome to the Weekly Forex Outlook at xm.com. Next week, the spotlight will fall on the US PCE inflation and Eurozone CPI data. In addition, inflation numbers from Japan and Australia are due out. How will this upcoming data impact the markets, and what should traders be on the lookout for? I'm Maria Bashardis, and joining me to discuss all this is Senior Investment Analyst Haralambos Pissouros. So Haralambos, let's start in the US, where we just heard Fed officials state that despite the slowdown in CPI inflation, they are sticking to their higher for longer mantra. Next week, the core PCE index for April will be out on Friday. What are we expecting there, and how might this data impact the dollar and the Fed's rate path?
Hello, Maria. Yes, we do get the core PCE index for April next week, which is the Fed's favorite inflation metric, and we get it alongside the personal income and spending numbers for the same month. Now, after holding steady at 2.8% year-on-year in March, I believe that the core PCE rate may be poised to cool a bit, something that is supported by the easing of the core CPI rate. On top of that, the slowdown in average hourly earnings and the stagnation in retail sales suggest that income and spending may have softened as well. So, a lower PCE rate as well as income and spending data suggesting that inflation may continue cooling in the months to come may prompt investors to bring back to the table some of their previously removed rate cut bets. Currently, they are pricing in only 36 basis points worth of rate cuts by the end of the year. So, increasing them could weigh on the dollar, but for the slide to prove significant, I believe that Fed officials may need to soften their language as well.
Moving to the Eurozone now, we'll get preliminary CPI numbers for May on Friday. Do you think this inflation data will seal the deal for a June cut? And what reaction are we likely to see in the euro?
Yes, I believe that there is a great chance for the CPIs to seal the deal for a June rate cut by the ECB, and I will explain why. Even with data pointing to improving activity in the Eurozone since the beginning of the year, there is a 90% chance for a June rate cut according to market pricing. And that's because ECB officials themselves have been continuously adding fuel to that scenario. Now, on top of that, according to the PMIs, the pace of output price inflation softened in May and was the weakest since November 2023, which means that there are downside risks to Friday's data. So, further slowdown in inflation is likely to make a June cut a done deal in the eyes of investors and perhaps allow them to add some more basis points worth of rate cuts to the basis points they already anticipate after the June gathering, which means that the euro may slide if we indeed get softer CPI numbers.
Turning to Japan and Australia now, on Wednesday we'll get the monthly CPI rates out of Australia, and on Friday the Tokyo CPI data for May are due to be released. How might these figures impact the BOJ's and the RBA's next moves? And what's the outlook for the yen and the Aussie?
Now we'll begin with the Bank of Japan. We had contraction, data showing contraction in Japan, but despite that, and despite the slowdown in inflation during April, investors are assigning a more than 80% chance for another 10 basis points hike by the Bank of Japan in July. Now, the Tokyo CPIs on Friday will be accompanied by the retail sales and industrial production data for April, so it will be interesting to see whether a slowdown in the Tokyo numbers for May and also evidence that the economy continued to struggle at the start of the second quarter will weigh on the chances for a summer hike. And if they do so, then the yen may drift further south. Now, in Australia, inflation has been proving stickier than expected. And if this is what the April data corroborate, the Aussie could extend its latest recovery as traders scrap the few bets they have placed regarding rate cuts by the RBA this year.
And finally, is there any other data coming out that traders should pay attention to?
Yes, we do get the Chinese PMIs for May and Canada's GDP for the first quarter on Friday. Now, with Chinese data pointing to a mixed economic picture, the PMIs could tip the scale. If they reveal softness, investors may start speculating that more support is needed by authorities, which could result pullbacks in both the Aussie and Kiwi. Now, the opposite may be true in case the data points to improvement. In Canada, there is a 50-50 chance for a quarter point rate cut at the Bank of Canada's upcoming decision in June. So a set of soft GDP numbers may convince more participants to join the June rate cut camp and thereby increase the pressure on the Canadian dollar.
Harlambos, thanks so much. This was the Weekly Forex Outlook here at XM.com.